Investigations by the Informa Media Group have established that thousands of Kenyan tea farmers are facing multi-pronged challenges masterminded by a cabal of cartels serving as middlemen and corporate-style thuggery, where farmers' income is credited as bank deposit, then advanced back to them as loan at exorbitant interest rates. Despite the much-touted reforms in the tea sector being championed by Deputy President Rigathi Gachagua yielding minimal results so far, farmers continue to bear a litany of unending woes. Largely in the tea sector, just like coffee and dairy sectors, attention has been directed to the marketing and sale process as opposed to the management of farmers' earnings. Even as Rigathi is scheduled to convene second tea stakeholders meet in Kericho beginning tomorrow after the Meru convention, the Informa Media Group now lays bare financial probity concerns in the management of farmers' income and the perennial loss-making investments by the Kenya Tea Development Agency KTDA through its enterprise wing, the Kenya Tea Packers Limited KTDA. Interestingly, directors of KTDA also serve as KTDA board members, a scenario that has been pinpointed as contributing factor to the mismanagement. An insider revealed it is unfortunate that KTDA, an investments arm wholly owned by KTDA, has never made profits for the last 10 years. This begs the question as to how the institution runs and is there value for farmers' money invested in loss-making enterprises? However, when contacted for comment, KTDA Board Chairman Ichoho and Group Chief Executive Officer and Managing Director Wilson Muthaura did not respond to our queries. Instead, KTDA's Group Public Relations Officer Ndiga Kithai promised to get back. Through a text message, Ndiga said thanks, will review and revert in a meeting though. Our 3-month-long delve into KTDA's management that unearthed cover-ups for fraudulent foreign trip claims by some KTDA board of directors, tendering irregularities and micromanaging of procurement processes by the board, despite it being an administrative function, we established that earnings from tea sale by KTDA are made as cash bank deposits at Family Bank Kenya Limited. Consequently, Family Bank lends KTDA Microfinance and Greenland Feather Limited the same money, that is farmers' money, as loan at exorbitant rates for onward lending to tea growers at an interest rate of 21% against the prevailing commercial bank lending rate of 12% on loans advanced. Greenland Feather Limited GFL is a subsidiary of KTDA Microfinance and both charge moderate rates to farmers when borrowing money from their own entity. According to internal KTDA records, there are over 700,000 small-scale tea holder farmers as members of KTDA, exclusive of the large tea plantation owners. Records show that KTDA is among the shareholders of Family Bank, holding 15.45% ownership. The estate of Rachel Njeri Muya owns 13.42%, Daikio Plantations Limited 12.30%, Tatas Kendo Muya 5.34%, Standard Chartered Kenya Nominees Account 9660B 3.73%, PA Securities 3.57%, Kenya Orient Insurance Limited 2.86%, Julius Brand Kiondo Muya 2.69%, Ann Njeri 2.68%, and Makiriri 2.68%, while an additional 35.27% stake is held by other entities. Our source added, to address the problem ailing the tea sector, it is imperative to get to the bottom of the segments of KTDA that was split in 2009 into KTDA Holdings KTDAH, KTDA Management Services KTDA MS, KTDA Foundation KTDAF, Greenland Feather Limited GLFL. During the 2-day forum being convened in Kericho by the DP, push for a review of the Tea Act 2020 to allow for direct export of made and change of model used to elect directors of KTDA are some of the reforms being proposed. Further, the tea sector reforms team is pushing for the establishment of a second tea auction either in central Kenya or Kericho to supplement the one in Mombasa. A KTDA insider added, it doesn't make sense that tea produced in central Kenya and Rift Valley is ferried all the way to Mombasa where there is a tea auction.